So as the first week of 2023 comes to a close in the stock market, we're starting to get the few stories that are breaking this year. One of them being the Chinese stocks. Chinese stocks are back and they are doing absolutely amazing. And today we're just going to mention what's going on with these Chinese stocks at the moment. Now, after looking at the comment section in yesterday's video, I realised that people do not want to see a little bit of background music, so there's no background music today. So I hope that's alright. If you could smash a like button, and I know there's no return to the background music, but we'll get stuck onto these Chinese stocks today. So just a shout out to you guys that are signing up to Trading 212 with the link in the description. If you join through there, you get a free share worth £100 if you sign up through that link. Someone actually got a free share of Nvidia yesterday, which is pretty impressive. So if you do want to join that, link is in the description. But let's get stuck onto these Chinese stocks, starting with Alibaba. You look at Alibaba at the moment and a lot of Chinese stocks have put the bottom in around that October time. And since that October, November time, they have been on a massive rally. Take Alibaba for example, it got to the bottom of $63. And you can see since it put that bottom in, the stock was up over 65%. And if you look at the last 5 days, the stock is up nearly 20%, which is pretty impressive. And when you look at something like an Alibaba, it was actually below IPO prices. So you look here from 2014 when the stock actually IPO'd. When it got to that point there, it was actually 30% below its IPO prices, which shows you how beaten down that stock had got to. Same with something like Tencent, they put a bottom in around that October time, got around to $25. Same again, up 74%. And when you look at something like a Tencent as well, they had got to prices, which they being a stock that's been on the stock market a little longer than Alibaba, but even then, they were getting to prices they were at in 2016. Baidu, which is always referred to as the Google of China, they have been doing exactly the same. Theirs was a bit more towards November time, but that stock is up nearly 70%, and they had a massive beating down as well. They were getting back to prices they were at in 2013, nearly a decade of gains wiped off that stock. And one that I own, obviously I own Baba, I own Huya. Something like a Huya got absolutely devastated. If we have a look at Huya, they IPO'd around $16, and around that October time, Huya touched $1. Huya actually got to a $1 stock. So that is way below IPO prices. And same again, since that bottom there in October time, Huya has actually gone up 182%. 182%. That is absolutely crazy. For 3 months, if you were able to pick that bottom at $1, you'd have got nearly a 200% return in 3 months. And realistically, a lot of these Chinese stocks, it was only a matter of time before a lot of them had a bit of a rally up. You know, I mentioned one of my predictions into 2023 was Alibaba will return over 50% this year and outperform the stock market. Obviously, it's not a bad prediction so far. It's doing better than even what I thought it would. And something like Huya, I said Huya would return over 50% this year and outperform the market, and it's actually starting to do that. And when you really step back and look at it, it was only a matter of time. You know, you look at some of these stocks like Alibaba, you know, the giant of China, and you know, you look at the levels that it was at below IPO prices from 2014. You look at something like Huya, for example, it was down at $1. You look at something like Huya and you just had to look at the balance sheet, and they're sitting on 10 billion of cash. Now, if we transfer that into US dollars, obviously, that works out as about let's call it $1.5 billion. And then when you look at what the company's worth, it's 1.2 billion now at $5. So when you were talking about Huya and it was down at the levels that it was at like $1.70, this stock was worth like close to like 500 million. So you were looking at this point of view and going like, Huya had nearly triple the cash what the company's worth. So when you look at that point of view, you're like, well, obviously that was absolutely stupid valuations. You can't have triple the cash what your actual company's worth. You know, someone buys this company for $700 million, for example. They're basically getting the company for free, because on the balance sheet they're going to be getting 1.5 billion in cash, and that's the levels that we got to. That's how ridiculous these valuations got to. And why did these stocks get to these sort of valuations? Well, there was a lot of negativity from the US. Obviously, we know tensions between US and China have never been great, and that kind of built up, especially through the Trump period. But even towards the period with Biden now, we saw a lot of pressures put on these Chinese stocks from the US. We saw, delisting Chinese companies. Obviously, this was posted on 25th of August. We saw pressures like this going on. And then to top it off, we had pressures from China itself. China itself was not helping a lot of its own businesses. We know there was this zero CV policy, which meant that reopening never really happened in China. They were shutting down nearly every single day. And then they were putting more restrictions onto their Chinese stocks. The amount of stories we saw about Alibaba that came out where they were saying, okay, Alibaba is not able to do this with the Ant Group financials, or they're not able to acquire so-and-so, or there's an anti-monopoly going on with Alibaba. They were always getting, hit with the Chinese government. And it's same with Huya. I owned Huya and I was like, the company's actually doing amazing, but the problem is it just keeps getting hit by Chinese regulations. They were like, we're now going to ban, the amount you can tip streamers. We're going to ban the game releases. We're going to tighten the gaming hours. And it all just built up where a lot of these stocks were just getting negatively beat down. And you're like, okay, there's a lot of negativity priced into a lot of these stocks now. And all these stocks really need to do really well is a bit of positivity now. And then finally, you see a little bit of positivity start coming in. You start seeing China being a bit kinder to these stocks. We saw the restrictions that they were placing on Alibaba. We start to see the US being a bit kinder to these Chinese stocks. And you can see here that it said that the delisting of US stocks is not going to happen. We start seeing that US have got access to these Chinese accounts and their financials. We start seeing that the Chinese government starts putting in policy supporting these Chinese stocks, and we start to see a bit of positivity start building up into these stocks. And we have something like the gaming licenses. A lot of these stocks get access back to the video games, and we see the benefit that has for the likes of Tencent. We have to see what the benefit is like that for Huya. And just very quickly, when you're so beaten down and you just get a little bit of positive news, you can see that reaction on the share price. So really, you see when all that negativity is built up onto these stocks, there's actually clear opportunities. You're having companies that are trading over half what their financial cash position is on their balance sheet, and you're like, well, that's clear as day as an opportunity. But the problem is when you see them share prices going down and down, that's a big play on the mindset of investors. That negativity that's on that share price going down, you go, well, clearly it's a bad stock because the share price is going down. And sometimes that build up of them share prices can cloud your judgment if you should be buying them, and you go, oh, you know what, actually I probably won't buy these stocks, because when the share price is going down and down, especially at this point here, you hardly struggle to see anyone justify buying them. Everyone at that point is the most bearish on these stocks, where they're like, oh yeah, look how bad they are. There's a reason why they're down here. You don't want to touch these. You saw it on YouTube, the amount of YouTube investors at the time were going, yeah, you don't want to be, involved in Chinese stocks. But at the same time, they were pushing, Tesla at $400 a share, and Palantir that was, 50 times sales. And when there's that kind of peak fear and the most negativity, funny enough, that's actually the most premium opportunity out there. And what you saw is when you're like, Alibaba at $60 when it's down there, and you see, actually, that is probably where the opportunity was, and it carries on building and the share prices go up. And it's very hard because you've got to look through that fear and negativity that's pushed out there and go, is this probably a buying opportunity? And if you're someone that took that risk on Huya and go, it's $1 and the financial cash balance on it is like 3 times what the company value is, I'll even hold it to what the company's worth on the cash side of it. You're rewarded with a 200% return. And that's sometimes a really hard, and the trickiest thing is blanking out all that fear and negativity and looking, okay, is this an actual opportunity right now? And clearly they were. And it'd be interesting to see what Chinese stocks do for the rest of the year. My thoughts is obviously, I personally still won't get too overexposed to Chinese stocks because there is that political risk there, and very quickly it can turn the other way and go south again. But at the same time, when you do look at the risk to reward and the valuations a lot of them were trading at, and the amount, we've had a year and a half of negativity on Chinese stocks. You only right now need a little bit positivity, which we're starting to get. and these stocks should do quite well. So it's a little bit out of your hands about how these stocks will perform, because it's more towards the media and what a lot of the Chinese government say, which is the little bit of risk that has always been there with Chinese stocks. But when you've priced in that much negativity, where you've only had negative headlines for a year and a half, and then you start to get a little bit of positivity, or we have positivity continue for the next 12 months, you should do okay. So that's the big thing to kind of weigh up, as long as you're getting a good valuation, really. So yeah, that's my thoughts at the moment of Chinese stocks and where they're at the moment, and the boom that they're having. So hope you enjoyed it, guys. Smash the like button if you're new around here, subscribe, and I'll catch you in a bit.